Can start. Good afternoon. My name is Henry Silverman, and as chair, I now call to order the meeting of the Bond Financing Committee of the New York Convention Center Development Corporation for Thursday, May 21, 2026. I would like to note for the record that this meeting is being webcast. The committee members have received the relevant written materials in advance of today's meeting and are free to ask questions at any time. We welcome public comment on today's agenda item. I will note for the record that the public was given the opportunity to comment on the agenda item by submitting their written comments by noon yesterday, and no comments were received from the public. I will also note that we do not have any members of the public attending today's meeting to provide comment on the agenda item. Before we begin, the substantive portion of the meeting, I would ask Michael whether there are any potential conflicts of interest with respect to the item on today's agenda.
Not at all.
Thank you. Hearing none, I'll move to today's agenda item. We'll ask Matthew Bray, the corporation's treasurer, to present the request for authorization to, among other things, perform certain acts in connection with the sale and delivery of the corporation's Series 2026A and 2026B bonds. Matthew, whenever you're ready.
Thank you. Today, the Bond Financing Committee is being asked to authorize the sale and delivery of the New York Convention Center Development Corporation Senior Lien Revenue Refunding Bonds, Hotel Unit Fee Secured Series 2026A bonds, to refund a portion of the corporation's previously issued revenue refunding bonds, Hotel Unit Fee Secured Series 2015 bonds, and issue Senior Lien Revenue Refunding Bonds, Hotel Unit Fee Secured Series 2026B bonds to refund a portion of the corporation's previously issued Senior Lien Revenue Bonds, Hotel Unit Fee Secured Series 2016A bonds. In connection with the issuance of the bonds, the corporation is also being asked to adopt the fourth supplemental resolution relating to the Series 2026A bonds, and the fifth supplemental resolution relating to the Series 2026B bonds, as well as forms of preliminary official statement, the contract of purchase relating to the 2026A bonds, the forward delivery contract of purchase relating to the 2026B bonds, and related documents. Corporations also being asked to delegate to certain officers and employees of the corporation the power to amend the amended and restated credit support agreement between the corporation and the State of New York Mortgage Agency, and determine the terms and conditions of the proposed sales of the Series 2026 bonds, and to sell the Series 2026 bonds on a negotiated basis pursuant to the contracts of purchase. The corporation intends to issue the bonds in two separate series and an aggregate amount not to exceed $575 million. The proceeds of the Series 2026 bonds will be used to refund the refunded bonds and to pay the cost of issuance of the 2026 bonds. The Series 2026A bonds will be issued by the corporation under the general resolution and the fourth supplemental revenue bond, Hotel Unit Fee Secured Resolution. And the Series 2026B bonds will be issued by the corporation under the general resolution and the fifth supplemental revenue bond, Hotel Unit Fee Secured Resolution. The 2026 bonds will be issued as senior fixed rate tax exempt bonds. Bonds will not be general obligations of the corporation, but will be special limited obligations payable principally from $1.50 per unit per day hotel unit fee imposed pursuant to section 1104 of the tax law. The 2026 bonds will have the benefit of the requirement that there be retained in the revenue account under each of the resolutions an amount equal to 80% of the aggregate greatest amount of debt service payable in any bond year, and the debt service reserve fund already funded at maximum annual debt service. In accordance with the resolution, you are hereby requested to adopt the supplemental resolutions, approve the forms of the preliminary official statement and official statement, the contracts of purchase and related documents, authorize the sales of the Series 2026 bonds on a negotiated basis pursuant to the contracts of purchase. And authorize certain officers and employees of the corporation to take all actions deemed necessary to comply with the final sale and delivery of each series of the 2026 bonds. Please note that by approving the Bond Finance Committee resolution, you'll be establishing an aggregate maximum par amount of the Series 2026 bonds that may be issued, establishing the maximum true interest cost for each series of the Series 2026 bonds, and delegating to certain officers and employees the power to amend the CSA to provide support for the bonds, determine the terms of each series of the Series 2026 bonds within the parameters set forth therein, including but not limited to the final aggregate principal amount maturing in each year, final maturity dates, and interest rates, and to make such changes to the related documents as deemed necessary. And thank you. Happy next week.
Thank you, Matthew. As noted earlier, we do not have any members of the public in attendance to provide comments. Michael, do you have any questions?
Yeah, I think it's all good, good business, in good order, and I've looked at this stuff, and thank you for that presentation. Just a couple of things, to look back on, and I have a question about, I don't know if anybody here can speak to how we came up with $1.50 and what's the history of that, and
It's lost in the mists of
I'm
time.
sure it is,
Yeah,
but
it's
how is
easily-
that, looking back
That goes
historically,
back
has
decades.
that, I know, I understand that, but how has it performed I mean,
Interestingly enough, in the most recent
I mean,
years,
it's brilliant, but and I was there, believe it or
Totally.
not.
Oh,
I'm
okay.
an original member, so but I'm getting older. No, but I'm just curious to know what the view is in terms of how that's operated as the support mechanism for all this great work that's been done.
yeah, I think it was very successful at accomplishing its goal. At the level it's at now, it's collecting, last year we had the highest collections ever.
Okay,
So we fully recovered from the pandemic. We collected approximately $54 million last year.
interesting. I wasn't even thinking of that.
Which is
Yeah.
great, right? The pandemic was really damaging.
Yes.
Right? We dropped as low as 19 million,
Okay,
which is very low in 2020. But it's really performed well. The part of it is the vacancy rate has been quite good in the hotels
Yes.
industry of late, right? In recent post
as in
pandemic.
quite low.
Yes.
Yes.
And the occupancy, the corresponding occupancy rate
Yes.
is very high,
Yeah.
right? In addition, the hotel supply has continued to grow,
Right.
right? So it's interesting because New York City's doing so well, right? Sort of in the tourism space post-pandemic, but even though the supply's up, the
Yeah.
vacancy rate continues to rise. So
Well, I'll tell you
really-
something, when I ran
benefiting a
EDC,
lot.
we used to study every event, whether it be the Thanksgiving Day Parade,
Right.
the Mets, Yankees, US Open.
All of it.
And it was an interesting thing because I think back then, if we got $41 million in annual tourism revenue, that was a successful
Great
year.
year, yeah.
And I think in the Bloomberg years, they built a lot more hotels.
For sure.
And I think part because of policies and things like that, New York became more of a tourist mecca.
Yeah.
And I think those numbers are now like 65 million. So it dwarfs what was done back then. So
That's great.
it's a great success story. The other thing I just wanted to sort of talk about, or have you guys talk about, is obviously we have a new Fed chair, Kevin Warsh, and I think interest rates are lower, but I think that they could be lower. So what's the timing to market as far as, or can you speak that at all, or is that just something that
little.
it's still not?
We can talk a little about this. We're planning to price it the first week in June.
Okay,
And we've been monitoring the candidates, right? And so we're authorizing quite a large sale, right? We're not going to get close to the top of the
Okay.
thing because the candidates aren't there. It's probably going to come out in the $425 to $450 million range
okay,
as a sale. And the PV on savings is about $35 million, plus or
Right.
minus, depending on what happens with rates. So we feel pretty good about it, even at the current level of kind of, the market's a little off.
yeah.
It's
I
not
mean,
bad news
I
for
gotta
sure.
tell you, I don't know that this Mideast thing is going to come to a head anytime soon. But I think
Right.
if it does, I think you could see some adjustment in the market. I think interest rates could come down. So I would just urge that a little bit of patience and flexibility in terms of
We
when
have
you
some,
go.
we've got flexibility
Okay,
built in
because,
for.
because I think the
2+
interest rates are
weeks.
obviously low, otherwise you wouldn't be doing this. I think you could get another 100 basis points, you know, if you hit the mark at the right time. That's my thought. So,
Great.
I mean, subject to those comments on senior.
Okay. Yeah, if you know exactly where interest rates are going to go, please tell us.
It's pure
This month
speculation,
we
it's
have
uninformed
a-
None of
speculation.
Great
us need to
spotlight.
work anymore.
Let's-
You know the answer to that. All right, if there are no other comments or questions, I will now move the motion for approval.
Well, having performed so with such erudite, skill set so far, I will so move.
I'll second it, and all in favor, us? Okay,
Unanimous.
thank you. The motion carries. There being no further business, I will now move a motion to adjourn this meeting.
So moved.
Second, all in favor, yes.
Aye.
All opposed, none. Thank you, everyone, for your participation today in the meeting.
Chairman, you're on.